Hello YouTubers, welcome back to the Independent Investor Weekend Edition. Today I'm going to talk mostly about commodities and mostly about copper. It's had a fairly big move over the last month or so, and a little bit uncertain why. But first of all, have just a general look at the markets. Again, last week the major indexes continued to increase, staying above the moving average, and volatility continues to stay very low, with the VIX about 10. So we continue to climb this wall of worry. The markets are getting very expensive for nearly every measurement. I have a spreadsheet I go through once every 2 months or so. Looks at about 20 or so different metrics in the market, and it's clear that we're overvalued on price to earnings ratios and price to book ratios, and some other metrics. But the technicals still seem to be quite strong. If you look at the volume, other indicators, the technology sectors still remain strong. There's not, don't really see a rotation into safer investments like consumer staples. Sometimes you'll see the consumer staples index starting to increase as people rotate out of their riskier investments, and we're still not really seeing that yet. So this market could still continue to drift a little bit higher. On the copper side, we can see it had it really started to move last October, and came up to about the $2.60 pound range, and then it continued, broke out again up to $3.16 there. And not sure why this is taking place. A lot of times copper is called Dr. Copper. It's the only commodity that has a PhD because of its implications for the economy, because it's used in so many things. Housing construction, industry, so it's a bit of a barometer for the overall economy. And I'm not sure if this movement here might be to some degree because inflation starting to finally rear its head in some of the, we've had assetflation, as I've talked about, with the housing and stocks from all the Fed printing, but some people are wondering if this now is actually starting to appear in some of the hard assets. But on the other side, I did watch a fairly long video on copper. I used to follow resources a little bit closer when we had the large rally earlier in 2000. And commodities actually have been in quite a correction now for a few years after 2008. And we can see here, since 2009, this is the Dow Jones UBS Commodity Index. It follows about 22 of the large commodity futures. So it's pretty broad ranging, and you can really see after 2009 how commodities just really were out of favor and have dropped back to quite a long time, decade low now. And there's some signs that this might actually be starting to flatten out and maybe turn up. And it's definitely, with copper kind of showing the lead there. There's also been some news, especially now with the China. They're having their twice-decade kind of communist meeting, and there's been talk about them redeveloping the old Silk Road. The Silk Road was all the way back in the Han Dynasty at 2007 BCE, right up to 200 CE, and that so about 500 years, and that was linking China with Europe, India, Africa, and it sounds like the Chinese are committed to creating this new Silk Road, which will have, which will be highways, will be more shipping ports, and that could have an impact on copper, as the project's meant to be about $900 billion, trillion dollars, so it's a large sum of money, and that could be driving the copper prices quite a bit. Also, it seems some of the newer technologies are going to require more copper as we migrate towards electric vehicles. Of course, the amount of copper in each vehicle will increase, and that'll be another strong demand. Also, I do have a chart where it plots the two of the big countries that use copper, China and Brazil, because of their growing infrastructure, and both those indexes, China index and the Brazil, it has kind of recovered and going up, so there might just be increased demand there from you know, increased economic demand within those countries. So I have traded one company a few times. I don't know if it's really specifically a really good investment. I don't focus a lot on commodity stocks. Typically they're not the best at rewarding shareholders because they spend a lot of money on capital investment, and then if commodity prices are increasing, instead of returning some of that money to investors, they usually go out and overpay for another company by acquisition, which leads to more debt, and then when the commodity cycle comes to an end, they have a large amount of debt, the commodity prices drop, and typically the shareholders left holding the bag. But I have Capstone Mining is one that I've traded. I actually traded early this year where it bounced off the bottom, hit that flat, then I got back out, and I just got back in recently, and around about $1.20 or so, and I think it has rallied quite strongly in the past. It's been over $4, and right now it's actually trailing. You can see here it usually trades fairly close with the copper futures. Also, we did have a bit of a rise in commodities because the dollar index did drop quite a bit, and with all commodities we priced in US dollars. If the US dollars drops, there's a tendency to bring the price of commodities up. The dollar looks like its dollar index there is starting to stabilize there, about 93 now, and we're still seeing the upward trend in copper prices. So this shows you Capstone Mining. Again, we were down to 80 cents. We had this rally, fairly strong rally up to about $1.20 or so, corrected back down to $1.10. I kind of sold in this area, and because I was unsure, it was kind of unusual that copper was breaking out and no other commodities. And then the copper prices started to increase again, and Capstone started to turn up, and now it's in this kind of nice channel. It's just been slowly going up. I'm not buying any more now. Again, I haven't done a lot of deep analysis into this company. It's just more of a technical play. I've recognized this pattern before, and it's a fairly good trading vehicle. The share price did drop a bit here because they reported some of their mining results, and they didn't quite meet the street expectations, so it came down a little bit, but then it recovered, and continues to slowly move up. But if we look on a longer term, on a weekly, we can see it has traded as high as $5. Of course, copper prices would have to increase again quite a bit for it to rally that strongly. But the move, it went from 69 cents up to $5, and then we went from $5 all the way down to about 29, 30 cents. So it is a very volatile company, and really over the long term you don't really make too much money, as you can see. But if you can catch one of these waves, which we seem to be in now, and if copper prices stay where they are and go higher, it should slowly continue to work itself up maybe to $2 or $3. So another thing last week too, the treasuries started to kind of increase a little bit more. You can see here on the 5-year, we went from, since September, we've gone from a yield of 1.6% up to 2%, which we're still kind of in a channel, but that's still a pretty strong move. And we're seeing that across the whole spectrum. The 10-year now is up to 2.3. We've got the 30-year now coming up to 2.9. So I don't know if that's bond investors starting to see maybe some inflation coming in, or if it's just the Fed now not you know, kind of taking some off their balance sheet. But it's it'd be interesting to watch that. If these yields continue up, at some point that's really going to impact the equity markets, because now people start having an alternative. If you can get 2 or 3% on bonds, the stocks being as expensive as they are, you're going to be some money rotating out of the equity market. Speaking on commodities, I came across an interesting company. It's ARLP is the